Well, today was just the appetizer for bank earnings. On Tuesday, we'll get Goldman Sachs, Bank of America, Citigroup, Morgan Stanley reports on Wednesday. Let's bring in Ebrahim Poonawala from Bank of America. Ebrahim, it's great to have you here. You know, we had your colleague Oh-Sung Kwon on the show yesterday. He was saying he was overweight financials, and he was laying out the case that it's less about net interest margin, more about book value. When we look at the results we've gotten so far from the names that reported this morning, yes, I realize results were largely solid, but it does seem like it's more about multiple expansion and investors pricing in the realization or potential realization of a soft landing here as well. Your thoughts?
Bowman, thanks for having me. And you're right. Since the start of the year, it has been a story about multiple re-rating. If you recall, if you go back 6 to 12 months ago, bank stocks, especially if you look at the regional bank stocks outside the top 4 or 5 banks in the country, have been out of favor because of different reasons. Commercial real estate, what happened with the post-SVB crisis. So as we came into 24, this was a group that was trading at 8 to 9 times earnings. Historically, trades around 12 to 14 times earnings. So as we moved forward in 2024, increased probability of a soft landing should have driven the re-rating. And that's what we are seeing, and that's what we expect to continue in the near term until as we wait for a rebound in customer activity at some point next year.
Is Diamond right when he basically says you're paying too much attention to net interest income and that perhaps it's a little toppy even as they put a number out there?
I mean, again, I think you're talking about $1 billion here or there on a base of $86 billion. So he's right in that, yes, banks are going to be under pressure in the near term. If the Fed had to cut rapidly 50 basis points back to back, maybe more pressure. Looks like that's not going to be the case. What really matters for bank stocks, if you're putting new money to work here, is what's the economy going to look like 6 to 12 months from now? Is investment banking going to be picking up? Is loan growth going to be picking up? Is credit quality going to be getting better or worse? And in the greater scheme of things, what happens to NII in any given quarter is less important.
The fact that you did see investment bank results in both Wells and JP Morgan today a little bit stronger than expectations, how does that set us up for Goldman Sachs and and Morgan Stanley next week?
Yeah. So we've been extremely bullish on investment banking activity. Goldman Sachs is on BofA's best ideas list. And when I look at both Morgan Stanley, which we think the stock is about to kind of escape 3 years of derating where it's gone sideways, and Goldman Sachs, the pent up. So we've seen a decent year so far, year to date, and the results should be fairly healthy when both banks report. Importantly, as we move into 2025, rate cuts, post-election visibility, and private equity sitting on a lot of assets that they need to monetize augurs extremely well when we think about M&A and IPO activity looking out into 2025. And we do think that's one way that investors should absolutely have a gearing towards is the rebound in cap markets activity. And we like both names, Goldman and Morgan Stanley.